All right, today is a spicy one. Some of you are going to be triggered, and that is okay. What I want to do with this content is try and lay out some surprising stats that I don't think a lot of Bitcoiners and a lot of people in the community are thinking about or are even aware of, and use that to kind of challenge our assumptions and pose an interesting question, which is, does the existence of a use case like stablecoins on Bitcoin further its adoption and make it easier for people to transition from this crumbling fiat world to the life raft that is Bitcoin? Or does this perpetuate fiat in a way in which we don't want? And what does the actual market and real world tell us? Because that's also important. Today we discuss all of that and more. Let's jump in. This video is made possible by Bitcoin trading cards, and I am pumped to have them as the first sponsor on my channel. I met Aladdin and the team back at Pacific Bitcoin 2022, and I'm not going to lie, at the time I thought, okay, cool, a quirky little Bitcoin project, but little could I have imagined at the time how this project would capture imaginations. I've personally used these to orange pill people that I care about in my life. The art is stunning and features Bitcoin artists all around the world. You get high quality Bitcoin education on topics like economics and freedom as part of that, which makes this, as you can imagine, a really special project for me. And I'm not gonna lie, it makes you want to collect these. The community behind this is also truly insane. And I think they have a real shot at bringing Bitcoin to the mainstream. So if you're curious to check them out, head over to btc-tc.com where you can find the different series they've launched. And hey, if you do end up snagging some cards, you'll also get some Bitcoin rewards back on your purchase, powered by Jolts. Here's to ripping packs and stacking sats. All right, so if you've watched my channel for any period of time, I hope you know by now that the last thing I want to see is fiat lasting a day longer than it needs to. Furthermore, it is my belief that fiat will go to zero against Bitcoin. Mathematical certainty, but how we get there matters an awful lot. People like Jeff Booth talk about the kind of broader transition and really needing to articulate better, like how do most people make that transition and get onto the life raft that is Bitcoin? For you and I, it might be so obvious and clear and easy, but like for billions of other people, it is anything but. And despite the astonishing progress that Bitcoin has made as a technology in its first 15 years or so, there is still, I think, a long way to hyper-Bitcoinization. Again, make no mistake, we can look at various statistics of the dollar, such as this one. This is looking at the currency composition in foreign exchange reserves. And as you can see, dollar-denominated reserves are going straight down. But people like Luke Grumman talk a lot about this, right? You know, foreign central banks stopped buying dollar-denominated assets like treasuries, at least on net, even all the way back in 2014. Foreign central banks have been buying gold like there's no tomorrow. I think U.S. treasuries as a reserve asset are eroding pretty quickly, right? Like before our very eyes. But if we look at this other graphic and you look at the bottom row, this is the share of USD in FX transaction volume. You can see that it is still absolutely massive, right? 88% is being settled in dollars. And this was as of, I guess, 2022, 2023. And you can even see that that is a little bit up from like 2012. So the point is that the dollar is still extremely dominant. It still has an extremely powerful network effect. Now, we do see accelerating signs of that beginning to change. You had the whole news recently that Saudi has not renewed the agreement for the petrodollar system. Now, on the one hand, I don't know how codified that sort of agreement was. People like Saifedean have pointed that out on Bitcoin Twitter. However, at the same time, I do think that is a seismic shift. Like, that's a big deal. It is just a very vocal proclamation to the world of what we've already somewhat known, which is that more and more trading parties are conducting trade in something other than dollars, whether it's Chinese yuan or other fiat currencies. So Dollar slowly losing its hegemonic status. You have the rise of this kind of multipolar world. That being said, the dollar is still the strongest of all the melting ice cubes, i.e. fiats, and they're all going to zero against Bitcoin. But over what time horizon? I think probably in my lifetime, but like this is decades away, in my opinion, at least. Curious what you think. And so with that context, perhaps it is not all that surprising that stablecoins have emerged as arguably the use case beyond Bitcoin as a store of value, right? I think unquestionably Bitcoin store of value. I don't think anyone can possibly argue that that is like the number one, use case for a blockchain, whatever, right? But I think stablecoins are the unambiguous number two. And I'm going to show you some stats as evidence for why I think that. Again, even if we don't like something, doesn't matter what you think, doesn't matter what I think. All that matters is reality, right? And accepting reality. A is A. Doesn't mean we can't change it, but we at the very least, have to accept reality before we can change it. So let's look at some context and stats around stablecoin usage, which I think will surprise a lot of people in the Bitcoin community. Now, for those of you that are completely new to the concept of a stablecoin, it is in some ways what the name suggests. It is basically a fiat-denominated or fiat-backed token on a blockchain. So vast majority of stablecoins, not surprisingly, are USD denominated, and they come in different flavors. You have centralized issuers like Tether. What this basically means is that Tether receives in dollars or dollar-denominated assets, and that is what then backs one-to-one the new issuance of Tether, the USDT token. There's also USDC, which falls into that same bucket. So these are centralized issuers that have reserves backing one-to-one the stablecoin. You also have crypto-backed stablecoins. You also have algorithmic stablecoins, which attempt to kind of make all these little micro trades and keep things balanced. And that was part of what made Luna, if folks recall, blow up in the last cycle. So there's different flavors of stablecoins, but that's the kind of concept. And so for a couple of these initial graphics, I'm taking them from a presentation Nick Carter did at Token 2049 late last year in 2023, which I think is really good. And he starts with this context that I think is also really, really important. He's essentially comparing the rise of stablecoins to the rise of Eurodollars. For those that are not familiar with Eurodollars, I am not going to get into that in today's video. But it really is an absolutely essential concept to understand how the world works, frankly, how the world of finance and anything related to the economy works. People like Jeff Snyder talk a ton about Eurodollars, but they're basically dollars that are outside the US, right? And so banks, international banks just create dollars out of thin air. So again, I think this comparison is really apt and goes towards sort of explaining why the rise of stablecoins sort of matters. And again, a lot of you are still like, well, are they really that big a deal? I mean, kind of, yeah, right? If we look at this view, they dominate on-chain transaction volume. Dominate, period, full stop. And that's even with, tons of transaction volume being settled on Bitcoin. So just let this sink in. Let that chart sink in. And furthermore, this chart was going around a little while back. This is showing different settlement networks. So you've got Fedwire all the way at the top, which settles just, huge central bank intra-country settlements. You've got ACH, you've got Visa up there. And out of nowhere, you've got, stablecoins coming onto the scene in circa 2016. And the claim here is that stablecoin transaction volume is already catching up to Visa. Now, Visa, of course, came out and said, well, there's actually a lot of noise in stablecoin data. Okay, so let's take it with a grain of salt, but they are correct in some regards. There's a lot of programmed movement and transactions via bots, via smart contracts. And so Visa has this on-chain analytics dashboard in partnership with Allium, which shows fiat-backed stablecoins on public blockchains. And so if we come over to the transactions tab here, it shows, 3.4 trillion in total transaction volume over the last 30 days. That is a totally absurd number. In fact, that's much more than what Visa probably did in the last 30 days. However, again, as we can see, there's this adjusted volume, which purports to remove and exclude what they call inorganic user activity. So this would be like bot activity, automatic transactions from centralized exchanges. What they're basically trying to isolate here is like actual organic usage of, I'm an individual sending stablecoins to another individual or to a business or whatever the case may be. And so by my count, if I sum up the last 30 days chart here, I get to about $239 billion. Okay, so $239 billion. Visa's annual transaction volume last year, I think it was in the realm of like 12-ish, maybe 12 to 13 trillion on an annualized basis. So that means that Visa is doing a little over $1 trillion a month, roughly, of transaction volume. And by their own admission, given that it is them who's endorsing this, we could probably assume that's a conservative statistic, wouldn't you think? But by their own admission, stablecoins are doing 20% of their volume, 20% of Visa's volume for technology that really has been around for 6, 7, maybe 8 years. That's crazy. And all the big fintechs are jumping in. We saw Stripe announce that they are slated to add USDC payment option this summer. PayPal, of course, launched their stablecoin late last year. So stablecoin volume, again, by my count, probably about 20% of what Visa is doing. Absolutely bananas. And then the next comparison I want to do is going to hurt. And I say this as a raging, relentless bull on the Bitcoin Lightning Network, okay? Let me make that very clear. The company that I'm a co-founder of, Jolts, is fundamentally a Lightning first company. I am not saying this from a place of, the Lightning Network, blah, 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 blah. But what did I say earlier? We have to accept reality for what it is. A is A. And so let's compare that to the Lightning Network. River Financial puts out a lot of great reports on the Lightning Network, and probably the seminal one, at least over the last kind of recent history, is their 2023 report that they put out in October of last year. And in it, we can see the Lightning Network is growing rapidly, right? Like, make no mistake, you see the transaction volume here, which is growing 546% in dollar terms over the 2 years from August 2021 to August 2023. So it's growing, but in absolute terms, so August 2023, River estimates as a lower bound, that is important, private transactions are excluded from these analytics. So this definitely is a lower bound estimate, but $78 million worth of transaction volume. So even if we're generous in saying, well, that's a lower bound, let's assume 100 million. That is 3 orders of magnitude lower than stablecoins. Okay? Said another way, stablecoins see at least 1,000 times higher transaction volume than the Bitcoin Lightning Network. And again, even tougher still is the fact that these technologies have been around for similar lengths of time. And we can see this other breakdown in the Visa and Allium dashboard of like, well, what are the kind of blockchains represented? You've got a lot of activity in USDC on Solana. I think these are the unadjusted metrics. Tether on Tron, USDC and Tether on Ethereum. Okay, so Bitcoin is absolutely nowhere there. So I think the market is speaking abundantly clearly that the world is not yet ready to do payments in Bitcoin. Like, I think that's kind of the tough truth. Even if you include on-chain Bitcoin transactions into the mix, stablecoins are still far above that. So it begs the question, again, this is not meant to be doom and gloom with Lightning. I am wildly bullish on Lightning. In one of my next videos, I'm going to do a video probably on Bitcoin and AI. So if you're not subscribed, be sure you are, because that's going to be a banger as well. And there is just a ton going on and to be excited about with the Lightning Network. But again, there is this absolutely massive gaping gulf to the point where I think it at least warrants the question, well, what about stablecoins on Bitcoin? Going back to that original question, is this a way, given that this is what the market is demanding, is this a way to at least get people onto the Bitcoin network? And from there, is it at least easier for them to make that transition all the way to Bitcoin? Or maybe gradually over time, a bigger share of their savings they're putting into Bitcoin. And of course, by way of historical context, stablecoins started on Bitcoin, on the Omni layer, right? And then you had the rise of the ERC20 token standard on Ethereum. You suddenly have just a lot more kind of optionality for traders and things like that. And so naturally, that kind of trading use case started to bring just the general lion's share of activity onto Ethereum. Tron comes along, Justin Sun, right, offers, extremely cheap, fast settlement, probably some backdoor deals with CZ at Binance. As Binance grows, so too does Tron as the kind of default option for Tether there. And then more recently, you have the rise of things like Solana. And so while we can certainly continue to debate the merits of do we even want stablecoins back on Bitcoin? Because that's something that is desirable. I can definitely appreciate arguments on either side of that question. But let's assume that there is indeed merit. Do we have the technology to be able to make that happen? And I would argue that now we finally do. What was initially announced as the Taro protocol back in 2022 from Lightning Labs later has become rebranded to the Taproot Assets protocol, in my opinion, is the technological answer to bringing stablecoins back to Bitcoin and specifically onto the Lightning Network, right? That's the key. You're achieving parity to something like Tron in terms of transaction speed and low cost. And this has been, years in the making, right? Since it was initially launched in 2022, you had the mainnet launch of Taproot Assets on chain back in October. But what a lot of people have been waiting for in anticipation is the Lightning component. Lalu, who is the CTO of Lightning Labs, over the last couple of weeks, has posted the world's first transactions for Taproot Assets on Lightning. So we are basically here. And by the time you watch this video, the kind of final release for the Lightning component to Taproot Assets may very well be live. Once that happens, I'll definitely do additional content. I did a video a little while back on the Jolt's wallet. So Jolt's my company. We actually ended up building the world's first non-custodial wallet that supports Taproot Assets. So this will be a non-custodial wallet supporting Bitcoin, Lightning, Taproot Assets, being able to do things like swapping from Lightning sats to a stablecoin. It's going to be pretty cool. So again, stay tuned for more there. But I can tell you from talking with people in places like Latin America, Argentina, Brazil, both individuals in the context of some of my consulting that I do on the back of this channel, as well as in the context of some of the businesses that we're talking with Jolt. I am telling you, this is a huge deal. This was also part of the motivation for why Samson Mao and Aqua Wallet has such a focus on the Latin American market. There is raging demand for dollar liquidity, dollar denominated stablecoins, but being able to interoperate that easily with Bitcoin. So make no mistake, there are millions of people for whom this is incredibly valuable. And so it's going to be interesting to see, when will we have Tether as a Taproot asset? It is definitely a when and not if, but we're going to see. We're going to see a lot of experimentation. I think there's going to be the Tethers of the world that come onto Taproot Assets. There's going to be some Bitcoin-backed stablecoins, no doubt, right? You're probably going to have over-collateralized Bitcoin-backed stablecoins. David Soroy did a very nice piece on why that is a super important thing that is valuable not just for prospective Bitcoiners, but even we existing Bitcoiners. And just to put a point on that, as I was doing the editing to this video, I realized I don't think this came across as clear as I wanted it to. But this distinction in terms of type of stablecoin, I think matters immensely in the context of the question, is this helpful or not, right? I think you can make an argument that the Tethers of the world, which back their stablecoin with fiat denominated assets, God forbid, US treasuries, right? that is an argument that, okay, actually these could perpetuate the fiat system that we don't want to exist anymore. So I can definitely sympathize with that versus this over-collateralized Bitcoin backed stablecoin. Now you're actually putting all the demand for the collateral towards Bitcoin, not fiat. And to the degree that something like that grows over time, you're actually sucking life force out of fiat. So there's a way, I think, to do this. And I think it matters the type of stablecoin that we're talking about. I think it's also important to think about how a use case like this can impact the incentives behind the Lightning Network. Roy Scheinfeld over at Breeze talks a lot about the flywheel effect of Lightning, right? Lightning is fundamentally this liquidity network. As more liquidity comes into the network, more usage can be supported. As more usage can be supported, the return that capital allocators can earn on that liquidity goes up. And it's this sort of virtuous cycle, right? And if you were around, you'll recall back in 2020, there was a lot of excitement around this ability to earn a native yield on your Bitcoin by locking it into a Lightning channel or series of Lightning channels and serving as a routing node on the Lightning Network. I think what a lot of people found is that in addition to being, not trivial to run a proper routing node, the ROI just wasn't quite there. And that is especially true now in a world with, risk-free, quote unquote, rates of 5% or whatever. And so would stablecoins dramatically increase the usage that we see on the Lightning Network that would in turn pull in a lot more capital and liquidity to in turn support an ever greater number of users. And therefore, is this an important part of the Lightning Network's growth story? Again, time will tell. I think you'll also see use cases for US denominated stablecoins as Taproot assets serving as reserves for eCash mints. I did a whole video on eCash quite recently. But I am curious to hear, what are your thoughts? Is this a bunch of nonsense? Are we doing everyone a disservice? Or is this a critical stepping stone in this process that people are going to take of going from where they are today in fiat land all the way to Bitcoin? Again, I want nothing more than for Bitcoin to win, and as a result, for humanity to win. But I'm looking at reality, and in my own conversations at the individual level, at the business level, it's becoming increasingly apparent to me that this transition requires some of what we've been talking about today. But let me know what you think. I hope at the very least you found this insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That helps get this to a broader audience. And if you were so enamored with this content, you want to donate to a pleb, which really does help me continue to make these videos, you could do so in a number of ways. There's the Super Thanks feature built directly into YouTube. Or if you want to zip some sats my way on the Lightning Network, you can use my Lightning address, me at www.ianmajor.xyz or ragermajor@getalby.com. And for those of you that want to get in touch with me, I'm now working with a number of clients one-on-one on a whole host of topics, whether it's taking self-custody, building and running a node, privacy best practices, inheritance planning, and more. You can reach out to me at vita.io/IanMajor. For now, we'll go ahead and leave things here. As a reminder, every sat counts. And until next time, my friends, I'll see you then.